Last time we looked at gold was on the 30th of June before I went for that holiday, when I mentioned that I was entering into positions with a view for a couple of scenarios. One of those scenarios is a bounce into a short-term daily cycle low before a continuation down into the intermediate cycle low, followed by a more significant rally into a new intermediate cycle. And a second, more bullish scenario is basically a rally into a new intermediate cycle all the way into July and August. Now, over the last 3 weeks or so, we have seen a bit of a rally, and given the strength of the rally, I think the second scenario with a new intermediate cycle starting perhaps in early July is becoming slightly more likely. Perhaps I would give this scenario, say, 60% chance, with still significant 40% chance for the second scenario with a short-term bounce, which we have experienced over the last 3 weeks, with a continuation down into the intermediate cycle low of all of this intermediate cycle that has been going on since the beginning of March. So this is a less likely scenario, perhaps 40% chance here. In this case, the intermediate cycle would probably last for 5.5 to 6 months. That's pretty close to the usual duration. Whereas in the more likely scenario of an ongoing intermediate cycle over the next several weeks, we have the previous intermediate cycle that had already completed, lasting for only around 4 months. Although it's shorter than the usual duration of around half a year, that is quite okay. We have a couple of short intermediate cycles which follow an extremely long intermediate cycle that lasts us through most of 2022. So that would just bring our average duration back to that typical half a year or so. Zooming in, what's going on right now is perhaps a bit of a cool down within the ongoing shorter daily cycle. After all, we have the FOMC meeting coming up in a couple of days, and the market pretty much expects with relatively high certainty of nearly 99% that the Fed is going to hike by 1/4%. With such high certainty, this is pretty much baked into the price already. So what's likely happening here is a bit of a sell the rumor, buy the news possibility, which would align with the technicals where we break above the 50-day moving average, retest the break before continuing higher in an ongoing daily cycle. This is the first daily cycle of a new intermediate cycle. These cycles usually last for a couple of months, and as it's the first daily cycle, perhaps it's going to top somewhere to the right side of its typical midpoint. That's a right translated cycle. I wouldn't be surprised at all if gold tests, say, the round number of $2,000. That's actually pretty close to the levels where gold had seen local tops and local highs, anywhere between $2,000 and $2,010. A test of that resistance zone after the ongoing weakness before coming down into the short-term daily cycle low, followed by a second daily cycle of an ongoing new intermediate cycle. I would give this scenario, as I mentioned, perhaps around 60% chance. Next, looking at market sentiment, if we have already seen the intermediate cycle low at the end of June, that's according to that 60% chance scenario, you might say that the sentiment hasn't really dropped that deep. The optimism index only dropped to around 48. And yes, sometimes historically intermediate cycle lows do come with the optimism index much closer to 40 rather than 48 or 50. There are also relatively more bullish periods of time, as you see all throughout the second half of 2019, 2020 and 2021, as well as the first half of 2022, where intermediate cycle lows take place with this optimism index somewhere around 50. By now the optics has only risen to around 58, and I wouldn't really get worried about an intermediate cycle top before this optimism index comes much closer to at least this level of 70 or beyond. And lastly, looking at seasonality, that's since 2015, the beginning of that bull market in precious metals. Seasonality also agrees here that a push higher is perhaps more likely. As you see here, July is usually very positive for gold. August is relatively positive as well, suggesting a push into a new intermediate cycle. And lastly, just to repeat again, nobody knows the future, so there is still a chance that this intermediate cycle that started in early March is still ongoing, and gold might still drop all the way down to retest that 200-day moving average, let's say, although this scenario is not very likely. So in either case, some sort of a risk management would of course be a relatively good idea. Perhaps a noticeable break below that 50-day moving average, or some of the recent support resistance zones around 1940. So those sort of levels might perhaps be used in your risk management. For now though, before we break below those levels, the outlook for precious metals does look relatively good. And for additional upside potential, join us at myfinancesteacher.org and have a look at this category of juniors in metals, where we have a quest for some of the most undiscovered gems within those promising developer explorers. These are the juniors that would provide you that additional torque to the upside if gold finally breaks to new all-time highs above 2070 sometime over the next few months. For now though, have a productive Monday, enjoy your day, and bye-bye.